Welcome to SOHO China's 2013 interim results announcement. At this time, we have two major announcements to share with you. First, our successful transition has achieved solid leasing results. Secondly, under the current market conditions, we will take a prudent approach to acquisitions. We're also pleased to report that we have maintained strong financial results. We're still cash rich, holding renminbi 15 billion in cash, and our net gearing level is only 14%. Our board has decided to maintain our high and stable dividend policy, and the board has approved an interim dividend of renminbi 12 cents per share. On the leasing front, I would like to share with you three projects that have achieved solid leasing results. First, SOHO Century Plaza in Pudong, Shanghai, 100% leased. This is the first fully owned office project leased after transition. 50% of the building has been leased to Shanghai Futures Exchange, which has attracted other financial firms like Everbright Futures, China Merchant Futures, Galaxy Futures, and others. Close to 80% of the building is leased to financial firms. We have been very focused on optimizing the rental margin, and I am so proud to report that rental EBITDA margin for SOHO Century Plaza is 88%. Qianmen, south of Tiananmen Square in Beijing, is SOHO China's only retail-focused project. It has taken us a while and a bit of a learning curve to get to where we are today. Finally, we have upgraded our tenant base. With 150,000 daily visitors, most of them are tourists, and the leasing at Qianmen caters to the tourism. Increasingly, we're seeing international consumer brands are coming to set up their flagship and experience stores. Like CJ from South Korea, Lenovo, and Samsung are all building experience stores there. Finally, Galaxy SOHO, in the past 8 months, we have been leasing 93,000 square meters, which is over 1 million square feet. The leasing really gained momentum from May to July, with an average of 19,000 square meters leased per month. What makes Galaxy so desirable? It's Beijing's newest architectural landmark and the first brand new office building with PM 2.5 free air quality. You all have heard how Beijing has become one of the most polluted cities in the world. SOHO China has taken action and become the first to provide PM 2.5 purified air in all of our developments. In Galaxy SOHO, our air quality already surpasses WHO standards. The red line here represents Beijing's fluctuating pollution level. The yellow and green lines represents the two competing vendors we have for Galaxy to purify air. As Beijing's newest iconic building, Galaxy has attracted over 300 events just this past summer, including brand promotion, public events, TV, movie, and commercial filming. SOHO Century Plaza, Qianmen, Galaxy SOHO are three cases that demonstrate how focused we have been on becoming a landlord. Now let's turn to our market outlook. First of all, it is a very uncertain time for China's economy. We're currently observing very high land and asset prices, so high that prices squeezed investment yields. With the current prices, we're doubtful that investment property acquisition will be able to achieve our internal benchmark of 10% yield on cost. Even worse, strata title property buyers are getting 3% yield, while they have to pay over 7% mortgage rates. On the macro level, government economic policy is not giving us clear guidance. One day we hear more stimulus is coming, another day we hear more tightening is on the way, and the economic data published is not showing much confidence in the Chinese economy. We therefore feel this is a time to be prudent on acquisition. We do think that the government will come up with clear economic policies in the next few months, but for now, we prefer to sit on the cash and wait. Let's move forward to our financials. It's been a great year. We are exactly where we expected to be when we announced the transition a year ago. For the first half of 2013, turnover was up 103% to 2.5 billion RMB, and the net profit was up 242% to 2.1 billion, of which core earnings was 537 million, up 130%. You must ask, why is net profit so close to turnover? This is a special phenomena of SOHO being in transition. The revaluation gains reflect the construction progress of our 1.9 million square meter investment portfolio. When this transition is completed by the end of 2015, revaluation gains will be a smaller component of our net profit, while rental income will be a much more significant part of SOHO's earnings. SOHO's balance sheet is strong. We have renminbi 15 billion cash in hand, while our net gearing is low at 14%. Even though we're maintaining a high and stable dividend yield policy, our stock is still trading at a huge discount, 62% discount to NAV. We do understand that this is still early stage in our transition, and share price is not fully reflecting the value of our portfolio. But we're confident that as our transition unfolds, our share price will go up.